In this video, we're going to explore the world of capital gains and losses, a crucial aspect of tax planning. We'll examine what capital gains and losses are, and how their dynamics can impact your financial situation. Let's walk through our agenda today. We'll define what capital gains and losses are. Then, we'll discuss how losses can offset gains, using a clear example to illustrate this. Finally, we'll highlight important considerations when dealing with capital gains and losses. Let's kick things off by defining capital gains and losses. When you sell an asset like stocks or property for more than you paid for it, you experience a capital gain. On the flip side, if you sell for less than the purchase price, it's a capital loss. Now let's discuss how capital losses can offset gains. Capital losses have the potential to reduce your tax liability, which is an important strategy in financial planning. If your capital losses exceed your gains, the IRS allows you to deduct up to $3,000 of the loss against your ordinary income. Engaging in strategic planning can truly enhance your financial outcomes. It's quiz time. Here's a question for you. How much loss can you deduct against ordinary income if losses exceed gains? Your options are $2,000, $3,000, $5,000, and $10,000. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is $3,000. The IRS allows you to deduct up to this amount of capital losses against your ordinary income, which can be a smart way to balance your financial portfolio. To make this concept even clearer, let's walk through a practical example. Imagine you have $160,000 in long-term capital gains and $30,000 in futures losses. Your losses will offset your gains, which means your net capital gain for the year would be $130,000. This principle applies across all realized capital gains and losses within a calendar year. Finally, let's talk about some important considerations. It's highly advisable to consult with a tax professional for personalized advice, especially with complex financial situations. Additionally, review IRS or other local authority resources for the latest information, as tax laws may change. Complex financial situations may also require an expert analysis to optimize your fiscal strategies. To summarize, understanding capital gains and losses is critical for effective tax planning. Losses can strategically offset gains, reducing your tax liability. Remember our example. $160,000 in gains offset by $30,000 in losses equals a $130,000 net gain. Finally, always consult professionals when dealing with complex financial math. Thank you so much for watching our video. We hope you found it insightful. If you did, please don't forget to like, share, and subscribe for more content like this. We'd also love to hear your thoughts, so feel free to leave a comment below.